So I'd say that any investment is a gamble. Doesn't matter what it is. It could be buying a house, buying a car, anything. When you're invested in something, when you paid for something and the price of that product can fluctuate, then it's a gamble, of course. But the difference between gambling in a casino and making an investment in an asset, and the asset could be your house, it could be gold, it could be oil, it could be currency, is that you have a lot more information about that. Well, the casino is based on odds. So with the casino, you're always betting with the house, and the house will always have a slight edge on you because that's the way these games are built. So when you're playing blackjack, for example, the casino always has the edge. But in the markets, you're not trading against one counterparty, you're trading against a whole other market, you're trading against other traders. So there's not necessarily any edge from you compared to another trader. You can create your own edge by making the right decisions, by getting the right information, but you're not trading against one counterparty. Now, the only thing that is against you is the spread. This is what the banks and the brokers are making from when you're trading, when you're trading, when other traders are trading. But that spread is not an edge that the broker or the bank has created for themselves. They're not pushing the probability against you. So yeah, I think that gambling in a casino is different to investing in the markets.
Good to hear. Some retail brokers run their businesses like a casino, allowing you to leverage 100 to 1. I mean, you talked about 500.
Yeah, there's a lot of variation in leverage that's offered, but just because you're given really high leverage doesn't mean that you have to use it. If you understand what leverage is, then you know how to use it to your advantage. I mean, what really dictates how much money you could potentially lose in a trade is where you place a stop loss order, for example, or how much money you have in your account, as long as the broker's not going to come and chase you for negative balances. So actually the leverage, when you fully understand it, it kind of doesn't matter, because if you're using a stop loss order, then you're in control of how much risk is in that trade. So if someone's offering you 1 to 100, okay, means that with $1,000 you can trade a $100,000 trade. But if someone's offering you 1 to 500 leverage, it means that with $200 you can trade a $1,000 trade. But does that really matter? I mean, no, because what is actually dictating is where you place a stop loss order. And if you don't understand leverage and you don't understand how to use a stop loss order, then don't trade.